Chris Payne is Payne Capital Management financial advisor. And Chris, we had our guest on earlier who said, look, it's very important to say, we all know this, but repeatedly say, look, the markets may be very, very optimistic, but the economic picture certainly shows that this is still a very long climb out of the declines that we've seen so far this year. And you've pointed out that as you look to 2021, it's very important to have a portfolio that is economically sensitive. What does that look like?
Yeah, so I think, if you look about the majority of the recovery has been focused on large growth companies, particularly the tech sector like Microsoft, Amazon, Apple, the FANG trades. But, the one thing you got to realize is that after a certain period of time, those stocks are going to start to get a little bit overvalued, whereas you're starting to see a little bit of what I call rotation. That started back in November, where we're starting to see things like small caps, for example, are starting to come back. So like if you look at like the last 8 weeks, small caps are up like 30% in comparison to like the Dow and the S&P. Those are up only about 14%. So, you're really starting to see some of these sectors that really hadn't done well through the pandemic starting to turn around. Another example would be like energy. It's hit its highest prices since March, even though now it's still down about 30% from its highs. But again, we're starting to see recovery there. Other places like emerging markets, they've started to really turn around. And you got to remember, like compared to thinking about forward earnings, the S&P is trading at like 22 times earnings. Emerging markets are only trading at like 12 times earnings. So, these are parts of the economy that are really starting to turn around, but are also still relatively cheap.
Yeah, and Chris, when we talk about that, how much of maybe those two ideas, whether it is betting on energy here in that recovery or emerging markets, might be covered up by the fact that we've seen the dollar continue to weaken here, particularly in the back half of the year? How much of the demand equation in your mind is maybe being covered up by that, particularly when we think about oil prices there and where that goes in this recovery?
I think, I think it's really more about, as things start to recover, we're going to see more demand for those things, especially as people start to travel, and also people are starting to look for opportunities in their portfolio. Like right now, I wouldn't be buying into the S&P or big tech stocks. I'm really looking forward to see where the discounts are. Where am I going to get the biggest bang for my buck?
And on that front, when you talk about emerging markets, overseas, we were talking about Europe earlier, seeing big gains over the last few days, partly on the stimulus talks here in the U.S., but also because of the resolution that is now in place around Brexit. What opportunities do you see there? And when you look at sort of investor portfolios, what do you say should be the allocation? Should it be predominantly U.S. equities? Should it be a bit of Europe? Should it be more EM? What are you advising your clients?
Our portfolio, for example, is a little bit slightly heavier weighted in U.S., but about 30% of the portfolio is in international. We split that between emerging markets, international developed, and for folks that are on the younger side, also frontier markets. And just because our philosophy is that most of the growth overseas, most of the growth that we're going to see in the future is probably going to come from overseas. You think about like emerging markets where you have some of the fastest growing economies and populations in the world. So, just looking at things in terms of opportunity, that's where we see the biggest opportunities.
Outside of that, when we're setting up for what could be another potential injection here, obviously, when we've seen these debates play out, it had seemed to be Republicans, perhaps the more cautious side here. When we have the Biden administration coming in here, along with Jerome Powell and the way that he's been playing this recovery, along with potentially as well Treasury Secretary and Janet Yellen here pairing up to really give another boost here. What are the market expectations in your eyes for maybe seeing that? Should we see, what's playing out in California right now with 0% ICU capacity, maybe start to hit, hopefully not, but maybe back in New York or other areas as well? What do you think the propensity is to see perhaps even another stimulus package?
Well, I think, the market's always going to be forward looking. So I think what the market's looking at is the fact that we do have two very effective vaccines. By the end of March, there should be about 100 million people that are going to be vaccinated. And on top of which, you've got a lot of cash on the sidelines. So there's also a lot of pent up demand. So I think, once the floodgates open, so to speak, and we start to see more mass vaccinations, I think those sectors that have really been hit hard, like travel, and just people's ability to want to spend and get out and do things, I think we're going to see a major melt up in the markets in 2021.
Yeah, and as Akiko mentioned earlier, still also that question of state aid not addressed here in the latest package. We'll see what happens play out there. But Chris Payne, Payne Capital Management Financial Advisor, appreciate you taking the time to chat with us today. Be well.